Welcome back, session 17, learning the stock game. I'm going to share my screen and then we'll get right into it. So I thought we'd take a break from FinViz and go over how to get started. So session 17, getting started in the market, your first stock trade. I had a lot of inquiries about how to get started. A lot of people unsure about that. Yeah, I've been doing FinViz and talking like a veteran because I've been doing this over a decade, and I apparently have lost a lot of people, so I apologize about that. We just go over the fundamentals and the basics and get your training wheels on. It's not about how much, it's more about when. It's not about timing, but more about when you're ready. You can have your first trade pretty much when the next time the market opens. It's just, are you mentally prepared? So that's what I'm going to do here today. Budgeting, I would recommend starting there. I've created a budget sheet for you. We'll go to see what that looks like. So it's about your income and expenses. I know this isn't fun for a lot of people. However, no one says you have to do this right now. You could literally work on this every day, make it before you go to bed, exercise, to spend 5 minutes and sit down and kind of think about it. I'm very familiar with the job market and everything like that as of today, and you just need to put down, what you make and what your expenses are. There's no easier way to earn money than to save money. So this is what this will help you do, is just locate what the expenses are. And sometimes you'll be surprised. Well, I didn't know I went out and drank that much, right? I didn't know that I had that much takeout or those type of things. And there's just so many ways to trim the bottom dollar. And one of them, of course, is to invest more in your 401k. You have a tax break from doing that, and you also get matched at work, and you also learn how to invest in the stock game as well. So there's a lot of benefits to doing 401k. That's personally how I started my success, is 401k. I never thought about doing 401k at all. It was a statement I get every quarter, and I just shot it out like everyone else and took one little glance at it, not impressed. And there was an accounting friend that came to me and he said, "What are you doing?" And I'm like, I looked at him puzzled. I'm just throwing this thing out. And he's like, "Well, aren't you going to look at your returns?" And I'm like, "No, they not." There was a little after 9/11 and everything was down, so there was no point, I thought. And then he showed his returns of 30-40% and how he doubled his money and things like that. And that was only after a quarter. So then I got really interested in it. And so if I'm your guide to help you do that at your work, we can go from there. Obviously, the timing's a little different right now. The market, while it's not bad, it's better than good too. So it's kind of like in the middle right now is how I would view the timing. We're high, but not too ridiculously high. I think there's still a lot of opportunities out there and whatnot. So we'll go back and take a look at the layout. So yeah, be a budgeting, figuring out your income, your expenses, earn by saving money. Anytime you save a penny, you're saving a penny, or now actually it'd be $1, then you save $1, but with the inflation. But yeah, 401k, I would recommend really looking at the statement, putting as much as you can into it. It's tax deferred. And like I was mentioning, you learn. How do you learn? You can go bigcharts.com. If you're new to the channel or if you've been here a while, you know that I like to use big charts a lot. It's one of my two tools that you'll see on a daily basis. And basically all you would want to do is put in the symbols of your funds through work here and then here, and then you just compare them. And then you put in different time horizons. I always like 10 years. That tells you the most detail of what's going on with one fund compared to the other. And then you go decade, 5 years, 2 years, and 6 months. And that'll give you a really good starting point. Again, if you guys have questions about anything, I'm here to help you. So you can just mention what you're having problems with and we can go over them. And then what I've done in these sessions is start to build a log. And I recommend you do that as well. Have an index, whether it's the NASDAQ 100, the S&P 500, or whatever you like. Just the index is kind of like your foundation, and it'll help guide you through the trades and understand where you are in the market. And what do I mean by that? Well, I figured out Dow Jones returns 8% by using the last 2 decades as my guide. You know, over time, 8% is the return, and the flux of between a year, between a high and low, is 25%. So I use these two numbers as my guide. So over the last 9 years, that would mean next year would return 15% in the market to average your 25%. And then, like I said, you got the 8% flux. And then, so that's how I can start figuring out what we're looking into 2024 as my guide. So therefore, I can figure out what I want to do with my positions. You know, I have over 20 positions I look at every day, and I set up something very familiar to this. It's just a lot more detailed and useful for me. So basically, your sheet would be useful to you, and what makes you want to pay attention to the stocks, because whatever you focus on will manifest. You know, everything does. It's a universal law. So if you focus on this 5 minutes, 10 minutes a day, it's only going to help you out. Just if you do nothing more than look at this, because like I say in every video, you know, we set this up for the market prices. So this changes per day. So understanding that, and then just have a stock that you like or a fund. You could start with a 401k fund at work. You could see over 10 years, it returned, like I mentioned, 8% is your average. I hope your fund does a lot better. The one you in your 401k returns, you can see over the 10 years, if it returns 12, 15%, which it should, then you put that down on your first fund and you select that, and then you track it per the market. So all this is tied in, and you can see day to day, month to month, quarter to quarter, year to year, what the prices are. And you can set up a high and low, so you know relatively if your fund is high or low, and that type of thing. You always want to buy more as the market crashes or as the fund crashes. You know, you'll find out that sometimes, like we did these sessions, and right now, for whatever reason, Crocs is lagging the market. So we have Crocs here, and we're down 10% for whatever reason. Meanwhile, the market goes up, and that just what happens for whatever reason. Maybe there's insiders that know something. Maybe they had a slow Christmas season. Maybe they're anticipating more money and they didn't quite bring that home to the investors, so they're selling out more than buying it. Anything is possible. You know, you just, instead of questioning everything, what you really want to do is develop a plan. And planning this stuff out is always the way to go. Like my Harley trade, you know, I planned it out. So if it crashes, I can DCA, dollar cost averaging, and end up making it into a profitable venture for me. And that's always what you want to do. So I'll leave you with, you know, my experience. I started before my 401k, I invested in Cisco and eBay were my first few trades, and both of them were profitable. I bought and then I sold relatively like 30% gain, and then just after a year and whatnot is how I did my first two trades. And I did a 401k later on after, you know, I started doing my 401k thing, and then I went into a 500 index fund, and I had that I want to say year and a half. Everything just skyrocketed when I got into it. I got a huge return, made a huge return, like 40% or something on a 500 fund. So it was just timing. I entered in at the right time, and I was young and a rookie. So I made a stupid mistake of pulling it. I wish, if you ever have something like that and you just add money when the fund goes down, you can get very wealthy just doing that simple strategy. This, in the stock game, it's so easy, it's so simple that people overcomplicate it and they end up making mistakes, fumbling, and then just selling out at a loss. And then they figure, oh, stocks aren't for me, and they get a bad vibe throughout their whole life. I have friends now that see my success, know I'm successful, and they still won't do the stocks because they internally have been shot down. I'm here to rebuild that fire for you guys. Let's start a plan. Let's get back into it. Stocks is where it's at. It's 8% per year for the index. That means it's a lot higher. Facebook doubled, Tesla doubled. The Magnificent Seven, you look it up, they had 100% return this year. I mean, there's just incredible results, and it's so easy. It's so simple. If you just have the right mental capacity and a plan, you will be successful. And I'm here as your guide, and I am here to answer all your questions and have success into your life. Have a great weekend, guys. Enjoy your holiday. But stay tuned for tomorrow. Bye.